The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this first day of June. Gosh, almost half the year is gone. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time. And thank you to our host. Great programming. Let's see if we can keep that standard up. The E-mini is up 375. You can see it right on the left side. Here is the daily chart. Trying to test the 2417.75 all-time high. This is really fascinating. The stochastic is flat at 92%. I have to respect that. I was expecting it to pull back a little bit. Yesterday, it did pull back, hit the 9-period moving average. Once prices start to test either resistance or support of that 9-period moving average, this black line, there's a really good chance it's going to continue doing that. But in the meantime, the weekly chart is still holding within a fraction of its all-time high in leg E. Hasn't gone to, it'll be a peak E if by tomorrow it hasn't gone above 2417.75. Hey, by the end of the day, we might even be there. And this is the 120-minute chart, just backing and filling within this rectangle formation. Let me open this up a little bit more, and you'll see, actually, let me get rid of some of this. What I wanted to show you is, look at that. You're really in a it's more rectangle than an oval pattern. And essentially it says, if the E-mini breaks into the 2422 area, that's really important. And that could sustain this up move. What it does is give support to the downside. It doesn't really say how high you can go, but it would be a big positive. And if it stays in this containment area, and by the end of the day, there's some bad news or something happens, and it goes back to 2409, it's at 2416 right now, that'll suggest, okay, rectangle pattern continues. And what was mentioned to me is that this is looking more what I call a rotational market than some kind of a major top. And I think that's the case just at this particular point. And let me explain to you what I'm looking at. I'm going to just move this over here, if you don't mind. Here we go. Okay. So let's just go through this one at a time. The Dow. I-N-D-U-E. I thought that was going to happen. Give me a second. I need to get rid of that sound. Okay. Volume, sound. Good. Okay, we're all set. See, the Dow has still been pulling back, and the Dow has been in this 13 weeks, almost finished a 13-week consolidation here, without breaking to 21,170 for a new all-time high. Isn't that interesting? So it's been a sideways consolidation within a high level. I call it a high-level consolidation, meaning that it hasn't gone to new highs, but it really hasn't broken down and has stayed within a trading band for a very long time. Over 2 months. That's really quite extraordinary, especially after this massive move in the monthly chart from November that just was soaring to higher highs. And you would expect that it would be an easy thing for the Dow just to pop into the 21,200s. So far, no. Now look at this chart right here. This template pattern, which I drawn some time ago on the Dow, where it shows you inverted H pattern, it's like a Y backwards, that can go into a double cup formation. Well, look at the MACD. The MACD has been very poor. It's not showing any strength whatsoever, which is the reason why rallies haven't really been sustained in the Dow. At the same time, it hasn't really broken down. It hasn't gotten to a very wide distance between the 9-period differential, the green faster moving average, and the slow red one. Yet the stochastics held quite well. It's at 75%. It's under the 80% level. But there again, it's not showing strength. And the on-balance volumes making lower lows, as well as the RSI. That's the weekly chart. Monthly chart still looks fantastic. So what we have is this consolidation is continuing. We're not breaking up, but we're not really breaking down. I think you'll break down if the Dow trades under 20,850 at any point in the next week. That'll start the breakdown. Aha! Now we can go to all the others. Look, S&P did make a nominal new high, still at the 2416 level over the 2400 high of the 1st of March. And here is a 13-week consolidation, but at new highs. So you can call it a consolidation, but in fact, if it's at new highs, that is suggesting that there's been enough upside momentum. Even this 9-period moving average that was hit yesterday was a springboard for a move today higher. So far that goes into the category of positive. Now you see this chart here where the MACD and stochastic in the daily chart of the S&P pull back very sharply, and then there was another rally, and the technicals didn't go to the new highs, but the price almost did. Well, it did, and then it held steady, but it hasn't broken to new highs over the last week. Well, I'm looking at this, and it's a pattern that I can recognize. Let me show you something here. Patterns are a fractal of human emotion. And you can see that in this particular pattern of the 10-minute E-mini chart, you went to a peak F. It was a peak D right here, and then the technicals broke down. And then there was this one strong move to the upside, going to this morning's high at 10 o'clock of 2417.50, testing the old high. And then what happens is it breaks down, it comes back to the 2413s, and now it's back to 2416.50. That's that right arm extension. Is there going to be enough strength now to suddenly power the Dow, to power the E-mini into the 2418s? This is what we're going to watch. Why? Because if that's the case, then I've got to think that this pattern here that we're seeing with the right shoulder has the power to move the markets higher. Now, my suspicion has been that we're looking at a rotational correction going on, and that we should see the SMHs, the semiconductor index, and the QQQ and the XLK, the tech S&P Select sector start to pull back. So now let's go on. If you look at the QQQ, you'll see the Qs are underneath yesterday's high, and that high was at 141.84. Today's high so far is 141.76. Now, what I was suggesting over the last few days is that Amazon is a bellwether for me and a benchmark. It's been making these round number highs, all-time high. When was it? At 999.00 on the 25th, has a peak the next day, that's peak E, has a high of 998.85. But wait a minute. It opens at around number 995, so that's the second day. Then it makes an all-time high of 1,001.20. No round numbers, except the following day. What does it do? It opens at exactly 1,000.00 and then pulls back, makes a peak F. Today, the high is the no round numbers. No round numbers. So I'm looking at this and I'm saying, you know what? Amazon's going to be a good benchmark, because if Amazon cannot close above the high of 101.20 on any day going into Tuesday of next week, but instead starts to test 984, the 9-period exponential moving average, I would volunteer the observation that Amazon might have made a short-term top. Ooh, Amazon, a short-term top? I don't think it's even heard of that. Well, the day is young. I'll be back. We'll talk about gold, we'll talk about copper, we'll talk about crude oil, we'll talk about bonds.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. All right, so this is I'm going to give you a bit of a summation of what I'm looking at here. So we're looking at the IWM. IWM is up 87 cents and 137.19. My suspicion is that we're going to be looking at the Dow and the IWM still weak. I've still got sell signals on both, but I would not be surprised if they start to hold up I'm saying that. I don't have to rally strongly, but hold up a little better than the QQQs, if I'm correct in saying I believe we are making some kind of a top here. And it's going to be a top that starts slowly to roll over. I don't think it's going to be a big smash until bad news permeates the market. But it could start to roll over from here. So the QQQ possibly making an unusual peak. Genia, remember that pattern that I was talking about, that right arm that on the right side yesterday I spoke about it. It's what I call the double camel hump, where the stochastic makes an arch formation and sort of flattens out, comes back down, and then there's one spiral to the upside where one of the technicals, the MACD or the stochastic, confirms the rally and the other doesn't, and then it fails. And that's kind of what I think we're looking at here. This is that pattern that we looked at in October of 2007 when I said I believe this is that particular pattern that everyone thought the August high was it for the market. But in fact, the weekly chart suggested we could go to another one or two highs and then fail. And that's kind of what we're looking at possibly here. Reason is I think Amazon's giving some kind of a clue. If you look at the XLK right here, making a peak F with a high of 56.85 yesterday. And that's the pattern that I've drawn in there that I believe is probably what we're going to be looking at. Just slightly lower lows and lower highs and until the 55s is hit. Then we're at 55s is taken out as support. And we'll see. And leg E in the weekly chart. Okay, so there are a couple of things that I also want to look at here. If we can go to gold, you'll see that gold is down $8 at $12.67. Not a big deal. Holding the 9-period exponential moving average. But when I was discussing this with William from Singapore yesterday, I was saying, I don't at this point see a very strong signal to say that gold is going to spiral into the 1282 area or higher. And it had to happen soon because the technicals were actually acting quite well. I couldn't understand. And the dollar was acting quite weak. So the gold had every opportunity to move higher. And the dollar's trying to rally here. It's up 14 cents. It's 97.12. I think it's going to fail. But what's really interesting is that gold hasn't taken every opportunity. Even the discussions with the foreign countries that are getting kind of nervous about the world, you're not seeing a flight to safety via gold, and you don't see it in the GDX, which is the gold miners ETF, although it's up today 2 cents. It is under the 9-period moving average, and it's been that way for about 5 out of the last 6 sessions. So this says to me something a little strange is going on. Now, this is what I think could be happening, is that within the context of those 3 fabulous instruments, the QQQs, the SMHs, the SMH trading right now at 85.87 underneath the last high of 86.58, is suggesting to me, when I went through those 50 NDX 100 top stocks from Investors Business Daily, the Investors Business Daily top 50, they include New York Stock Exchange stocks as well. I was kind of surprised because so many had this pattern in the weekly charts. I mean, I don't know if I want to go through it again. I can grab anything. What am I looking at here? I'm looking at something I haven't looked at for a while. Let me see. I'll grab this, whatever this is here. Let me give you a COHR, coherent. I don't know what number it is. Maybe 13. Look at that. Made its peak F in the week in the daily chart right there on the 16th at 260.25, 16th of May. Gone flat. Looks like it wants to pull back. And it's in a G/C in the weekly chart with the stochastic 87% good, but starting to turn down. The RSI is kind of good, and the on-balance volume is just starting to turn down. MACD is still good. So this is suggesting to me, this is one of those coherent ink laser precision instruments for photonics. Instruments for photonics, and it's only a leg B in the monthly. So this is a fantastic looking chart, but I think it's in a digestive phase. I just grabbed that, I just wanted to see what anything there. It's got applied materials, AMAT. I haven't looked at that for a few days. Look at this, leg D and a leg F in the weekly, a very quick E to F. I think it's getting close to some kind of consolidation. Doesn't mean a downside smash. I don't know, they're coming out with fabulous earnings and stuff. So it might just be a consolidation at 46.03. If it goes down below 44 over the next week, then all of a sudden you're looking at applied materials starting a digestive phase. And this is one of the best of the semiconductors. So anyway, I just wanted to do that and say that I believe we're going through a rotational correction, and that we've gone through this rotation in some of the indices like the New York Stock Exchange, the IWM, the Dow. But you've seen the S&P squeak to new highs, and at the same time, the Qs have led the way. And now I think there's going to be some kind of a digestive phase. However, I'm completely wrong. If the Dow, if the Dow suddenly takes off, where did I put that? Oh, I typed that over there. INDU. If the Dow suddenly takes off and says, you know what, I'm going to go to not just a leg D, I'm going to go even higher. I'm going above 21,169 to an all-time high. I'm going to 21,230s. I'm just going to turn around and say, you know what, this is the ever-ready bunny. Don't get in the way of a bear market. This is going to go higher. I just don't think it's going to do that. I'm just looking at too many corrective instruments right now. So that's my stance. I wanted to get that out there. I wanted to show you crude oil. Crude oil is down. Oh, now it's up. It's up 67 cents at 49. I guess there was some kind of news that might have helped it. And that's the reason why the market suddenly popped up. I bet ExxonMobil, yeah, it turned around. Now it's up 5 cents. It was going to lower lows. It took out the left side low of April. Not such a good sign. Monthly chart does not look good at all. So yeah, you had a bit of a pop in crude oil, something most probably about inventories. But you know what? There's a glut of oil out there. All right. So I got that. Haven't looked at high-grade copper. High-grade copper is trading at, it's up 0.09 at 2.5895. Yeah, nice action, but it's still within the lower range of this consolidation phase until copper can really get into the 2.63 area. I'm just going to call it chop, 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 sideways action, right? So I think I've done everything except the TLT, which was down when I last looked. Yeah, it's down 28 cents, coming back from an earlier gap down opening, making a peak C. I think that I need to keep my eye focused on the TLT. Actually, we have it as the long position in my opening call. Check out my opening call. If you want to be a subscriber, go to the front page of TFNN. This is a great time to do it. It's just a lot of things going on. We're not afraid to go long. We're not afraid to go short. We're trying to put our money where the opportunities are, and we'll see how that works out. And most importantly, bonds are saying that if there's a break into the 125, if it goes 2 points higher over the next week and a half, this market will pull back sharper as bonds become a safe haven and equities become a place to liquidate, at least shorter term. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Chapman back down, up 27, S&P's up 5. Now, what's really interesting is that within this mixed market, it really is a mixed market, even within sectors, you can get some stocks within the sectors doing very well and some sectors doing very poorly. Most importantly, what I'm looking at is the IYT, the Transportation iShares Fund, is up in leg B at 166.77, trying to tackle the 167.77 last high, and looking very strong technically. In fact, this looks like a chap wave squash to the upside. So here you are with the transportation saying, hey, wait a minute, we're trying to come back. We're doing okay. I mean, we're down from the highs that were made back in 173.88 earlier this year. went all the way down to the 157s, but now look where we are. We're at 166. So I like the action. I also drew in the two conflicting waveforms. One is the lowercase h, which says if you go to a lower low, you can rally, but you're probably only going to rally to the previous high peak, which is that peak right there of 167.77 back in late April. The stochastic is improving. It's at 33%. It's not very strong, but it is improving, and the MACD is trying to turn up. So this is going to be very important because, yeah, again, we've got conflicting signals. We looked at wood, which is WOOD the other day, the iShares, the Timber and Forestry ETF, which was very strong, and yet crude oil was, yet copper, high-grade copper was just kind of at the lower end of its trading range. And I'm saying, wait a minute, one shows the world economy in terms of buying power and activity with copper, and the other says this is the real buying power because there's wood and timber forestry products that are being used. One's going to a high and one's stuck. Well, we just saw that the XAL, which should be, yesterday when we looked at it, the XAL, which should be really benefiting from the lower oil, XAL, this is the ARCA airline index, was trading kind of so-so. It wasn't at highs. It's not off the highs by much, 114 right now, and the highs were back just in the 115s. But it hasn't been doing very much. It should be much higher. So there are these dichotomies all over the show. So yeah, let's go back to the story. So if the IYT continues running, I have to say, you know what, we could be in for another correction, and this time it just takes in a sector or two. So high tech and maybe the semiconductors. We'll watch this real closely. At the same time, we've got to watch to see. You really do want to have the 2000, the small cap index, the Russell 2000, which is trading at 137.38 right now, a nice candle on the day. You want to see that running very strongly. The MACD is trying to turn up. The stochastic's really quite poor. So it's stuck in a range right now. It looks good when it's running. It looks bad when it's pulling back. That's the kind of action that says, oh, a little undecided and it's stuck in a range, mostly going to lower lows and lower highs. So we watch this real closely. Now we get to the issue. If, in fact, this is the U.S. T-bonds, continue to rally like this at 153.5, if it breaks above today or tomorrow, breaks above 153.28, the high that was yesterday, you're looking at this H that goes to a lowercase m pattern in the weekly chart starting to deteriorate and become stronger, deteriorate in weakness, strengthen in the technicals. And that says that if it goes towards the upper end of this channel into the 156 area, that's where money could flow out of bonds, out of stocks and into bonds. So those are the levels I'm watching. Bonds will break down if they go from the 153 area and a half right now to under 152. That'll be very poor action. Okay, I wanted to do a couple of things just to show you what I'm looking at. Then a question came up, what about the VIX index? Well, I think the VIX is still in play. It's at 10.29. It's in play as an indicator. But I'm going to make the suggestion now that you have to look at the VIX index on a closing basis. You can't do intraday. It's at 10.29. On Friday, at the close, if the VIX is above $11.30, that is a positive for the VIX, a negative for the market, because the weekly chart will be above the 9-period exponential moving average, which it has only closed a couple of times, 3 times in the last, since, this is hard to believe, since, I can't believe this, since November of last year, since the election eve, bonds have closed under the 9-period moving average every single month except for once in December of 2016, December the 30th, the week of the last week, the week of the 24th of March, and the week of the 14th of April, and the following week, the 21st of April, and then plunged back down. Isn't that interesting? Oh, we just snuck it fractionally above the week of the 19th of May. So that's it. So what I'm saying to you is the VIX will become important when it starts to trade in the high 11s, 12s, and holds there at the close. You've got to get a closing price. because if it doesn't close there, it's just not going to have strength. Okay, good. So that's, and I did look at the euro dollar, EUR, USD, and then I've got a lot of questions. Euro dollar acting quite well. It's trying to break to a new recovery high, and that'll be, if it's above 1.12678 tomorrow, it extends leg C. If it does that on Monday, it goes to a leg D. My target has been the left side, November high of 1.12989. I can't stand all those numbers. And if you look at the USD JPY, didn't I just, yeah, USD JPY, that's the dollar Japanese yen. It's trying to retest the lows, and that's the low of the 18th of May at 110.233. I think it will. I think it's going to go there. In fact, it's going to go to the 200-period simple moving average of 110. I wonder what that is. 110.004. Oh, right. I think we covered a lot. So now I have the questions. Let's go from the beginning. XRT. XRT is a very limited retail Spider retail fund. It's running. It's at 41.26, up 52 cents. Yeah, the MACD is turning up and the stochastic's turning up. Weekly chart is still very poor. So what I'm suggesting is there could be a bounce a little bit further. It could get to about 41.60 to 41.90. And then it could start to reverse and retest. The RTH, which is the retail index, which has Costco, etc., is an ABC. I'm going to say this is in E/C. There's even a chance that I have to favor the C. So E/C. Picks up the old one, the old letter, and it goes peak A. Let me do this, gray A, gray B, and now it's blue E/C. And I put a plus sign here because we don't really know if it's a buy mode yet. Okay, and now it's leg D in the weekly chart. Ooh, getting close to some kind of reversal. That's when you put on the you lift your foot off the accelerator. So we're watching this very closely. Good action, all-time highs. In fact, right as we speak, all-time high in the retail index, and you would never dream so if you were looking at, say, TJ Maxx, which has been one of the great companies trading at the lower end of its range, having hit the 84 area. And now it's down at 75. And but if you look at Costco, and there was another question. What about Costco? What is the question with Costco? On track for all-time high weekly close. Yeah, this is A. Look at that. A, B, C. That means you're probably not going to make an all-time. You're probably not going to make a peak until next week, Monday or Tuesday. Very good action, Costco. Oh, what a mixed market. I'll be back. NLY, question on NLY. Let's put it in here before I forget. NLY trading. Oh, nice. Back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Yeah. So let me just finish this. We've got $12.06 on NLY, Annaly Financial, was it Annaly Corporation Management, Mortgage, Management or Mortgage? Management, I think, Inc. It's in leg D in the monthly. Look at the monthly, a perfect Chapman wave. Let me just put this in here to show you. Look at that, right there. I'm going to make that nice and bold. Let's make it purple. Good. Look at the left side, right side price time match from the high that was made in the monthly in August of 2014, $11.95, comes down to $8.25 in January of 2016, and it goes back in exactly to match to perfectly left side, right side price time match, and it's in leg D monthly, leg D weekly, only a leg B in the daily. Now, I've got a 2-bar, parallel 2 bars, but it's a very low price stock. So 11.51 on the 17th of May, 11.51 on the 18th, but it did that before. It did that on the 12th and 12th and 15th consecutive sessions at 11.33, sorry, back in May. So I was going to say I could even use that as an alternate count with what I call a phantom peak. I could call that a phantom peak A, this is a B, and this is a C, just so that I get you to a D. It'll be a C, but in a quicker time, and you're ready for any kind of pullback. So just keep in mind, I'm calling this C at the moment. I am going to call that a peak A, even though it's parallel highs, just to say I want to be a little ahead of the game. Nothing to do. The MACD is good. Stochastic's good. Looks very nice. So congratulations, Peaky and the Daniel. We're a real winner. Now, let's look at something else. I want you to look at CX. I looked at this in the Investors Business Daily because I was a little surprised. I can't remember offhand now what number it was, but it was there, and I'm saying to myself, hey, wait a minute. That's May 8th. That's the wrong one. Where's my, oh, there it is. So let me try to find this, if this is the right paper, otherwise I can't do it. No, it disappeared. Oh, there it is. So CX, there it is. Oh, CSX. Oh, okay. Because I'm looking and I'm saying, this is really interesting as a rail to be in the top Investors Business Daily 50. Something really amazing is going on. Let me just see if I can find it. Maybe I'm right that I did see CX, but this is CSX. Okay, so let's skip that. CX right now is trading at, oh, it is CSX. Sorry, CSX is the rail company, and I think Buffett has a part ownership, and it is in the Investors Business Daily top 50. So yeah. And the fact that it was there, I say, that's something to keep in mind, because that's a good thing. So let me just double check here. Basil, good morning. So what do you think about CX for long? Want to start a half position? Is it the right place? Thanks, Sunday. Well, boy, it went to the 200-period moving average. It's trying to base here. This is a mix. Oh, of course, CX. I just haven't looked at it for a couple of days. It's a cement company that we always talk about, and we always get a call about it. CMAX SA, Mexican cement company, trading $8.45. I'm going to make the suggestion. I don't know about a half position. I'm going to say right here at $8.45, I'm going to suggest you start a position. To feel comfortable to say a half position, I would have to say if the stop is going to be 10%, 80 cents, I need more. I need $8.12 as the 200-period exponential moving average. I just wonder, and in the beginning, I want to have at least some leeway. So I'd say, yeah, $1 is what I'd want, but to have $1, no caller online, P wants to know. No. What we're looking at is it's trading up 18 cents. It had the arch formation, and it's had plenty of them, and they've been failure patterns as it's gone to lower lows and lower highs in the daily. However, the MACD is trying to turn up, and the stochastic's giving a nice indication of some kind of internal strength. Some. My concern is that the weekly chart is still very negative. So, Sandeep, this is what I'm going to say. It's holding the 9-period moving average in the monthly chart, but that's kind of the rudder is the daily, and then it goes to the weekly, and the weekly is suggesting there's a chance that if it breaks $8.20, it's going to quickly test $8.12. So if it doesn't do that, and instead it goes to $8.63 between now and Monday or Tuesday, without taking out yesterday's low of $8.21, what is that? Let me just check. $8.25. That's really good action. I would rather add with some strength. So I'm going to say to you, yes, at $8.45, since you followed it a lot, I know, and since you want to have a couple of positions, start a position right now at $8.45. Give it a little leeway. I'm going to say, please, give it at $8, $7.98 as a leeway just for the next 2-3 days. I don't think it'll hit that in the next 2 days, but it does have a pattern of lower lows and lower highs at this point. And if it does turn around, it's going to take out yesterday's low. So start a position. It could be more than a starter position, but it can't be a half. In my book, it would be gambling to make it more than a half, even if it succeeds and goes fantastic to the upside now. Based on the weekly chart is just suggesting it's had 3 weeks. Tomorrow, Friday, is the last day of the week. So it'll be 3 weeks tomorrow if it doesn't go above 856. That it has not been able to close above the 9-period moving average. And the technicals are weak. If one of the technicals was strong, I'd say yes, but I can't. So I'm saying start the position around about this 845 level. Give it a little bit of room. Let's talk again. What is today? Thursday. Let's talk again Monday or Tuesday. Okay, good. Next question I had was General Motors. Now, what surprised me last night, I'm looking at this. Oh, look. There's so much bad news, and General Motors has gone from $31.96 to $34.60, up $3, up almost 10%. It's actually up 10%. Weekly chart has improved. What can I say? What a mixed market. All I can say is that that's good action. So the question is, is there a question involved here? Let me just see. You just want to know the wave count? The wave count is very good. It's in a strong leg A to the upside with a good MACD and a good stochastic. The weekly chart is suggesting it's just the start of a position. It needs to get to the 3580s, 3620s to really say, you know what, I'm done. You can talk as much as you want about the economy. I'm done because I'm General Motors and I'm going high. That's what it's saying. So let's go to Ford. It's the same thing. And funny, I looked at these and I don't remember what made me look at General Motors last night. I don't know if somebody said, I don't know what it was. I looked at General Motors and said, hey, that's not bad action considering. So yes, something's happening. If I go to FCAU, which is Fiat Chrysler, nice candle. Now it's not looking as good as the others. Before it led the way to the upside. So all I can say is, I don't know if you want to buy, if you're just asking about it, but I would say to you, if the market is going to be pulling back, this is part of the rotation that we might be looking at. That maybe the semiconductors are saying, hey, you know what, we're going to have a bit of a breather. Maybe the QQQ is saying, you know what, I'm going to have a little bit of a breather. But while I'm having that breather, some of the heavy-duty cyclicals, let's see what X is doing. It's down 27 cents. I'll be right back. Basil Chapman, Tiger International Hour.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So in my opening call, my daily newsletter, there are a couple of things that are going on. One is, in my overview sections, what I do every day, let me just see if I can pull this across. So the objective is always to get from the low bar to at least the leg D. That's what we try to do. I send out a lot of charts every day, certainly over the weekend, the 12, 14, 16, 18 charts sometimes. But it's just all within specifics of showing the Chapman Wave methodology. In my the daily report, if I can just find it over here, there it is. This is the daily. So this is the daily. I was showing how the 9-period moving average held its support yesterday and discussed what we're looking for. I also discussed something that occurred in my overview, market overview and market today section, where I have these 5 quadrants. I showed that there's a pattern that I look for, like an oval pattern, with the top is an arch and the bottom is a cup. This is the 120-minute Dow. This is the 120-minute VIX index. And I say at some point they're going to try to come together like a circle. Okay, that's kind of the part of the technique that we're looking at. But I also had an indication that said there's a Chapman wave trend gauge reading that suggests that within 1 to 2 days, there should be a 9 to 11 point push to the upside in the S&P E-minis, and that should help the cash indexes rally. And then I expected when it was over that market would start to pull back again. So this is going to be very interesting. That's exactly what we're seeing here. We're seeing some kind of a rally. Looking at the ESM now has gone to all-time highs. That means that I have to consider there can't be a G and it can't be a, this is a B. Oh, I can't believe this. A B. And if that is the case, if there's no alternate count, then it should go to a C and a D into early next week. But I'm not sure how it's going to do that if you haven't got the QQQ aboard. And the QQQ, it's happening now. It's a little bit better. It's up 18 cents. So maybe the Q just recycles and it goes slightly higher. But I really am looking at this and saying the Dow Industrial Average is very important, because if it goes to a leg D above 21,112, that'll be gray leg D. It's still below the 21,169 level. And I think what we're looking at here is there's a process going on. And that process is saying we're starting to run out of steam in the high-tech area or the top sectors and stocks, while at the same time, maybe some of the ones that had the worst action are starting to see some of the best. We'll start to have a little bit of a rally. And that might include the New York Stock Exchange, and it might include the Dow, it might include the IWM. All I'm looking at here is to say that this action that we're looking at here kind of confirms for me that we're looking at a rotational correction going on in some of the areas, and we're waiting for the rotational correction to come on in the stronger sectors. So yeah, we are. The New York Stock Exchange, 11,654, is 33 points away from an all-time high. And that is important. You've got to keep that in mind. So let's see if by the end of the day we start to see a little bit of weakness after this E-mini strength that filters into the overall markets. Just keep in mind that the volatility index in the 10s or lower shows not just buying pressure, it's really support pressure. And because the Dow should be up 140, the S&P should be up 18. If there was really big, strong buying pressure, and it's not doing that. And that tells me there are a lot of stocks that are dragging the market down, and there are a number of stocks that are just having enough energy to ameliorate that kind of action. So with that in mind, we're about to wrap up. We've got great programming coming up all day. Check out my opening call. Hopefully you'll find that it's beneficial to your health and hopefully to your wealth. And yep, we've got longs and we've got shorts, and we'll see what happens by the end of the day. Basil Chapman signing off. Have a great day. I'll see you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.